right, here we go again, guys. Welcome back. We've done it. We've done it. It is day 2 of what is going to be an absolutely amazing day. First things first, just let me know in the chat. Can everyone hear me okay? Can everyone see the screen okay? And where are you tuning in from as well? Let me know, guys, in the chat. There's going to be a couple of things we're going to do tonight. We are going to take things up a notch. We are going to simplify everything. We are going to change lives. This is going to be the event where you will look back on this event in a year's time and you will be so thankful that you joined and that you came along for the ride. And the worst case, you're going to be a much better trader. And I want to first of all thank every single person that is in this room right now. The fact that even just to have a couple of hundred people in here, let alone however many people have been here throughout the whole time, it really, really does blow my mind. And all I want to do is a very simple exercise. If you've got Instagram, if you've got any type of social media, all I want you to do is take a picture of this stream and basically just put it on your story, tag me, and I'm going to upload because I want to show everyone how many people we've been able to affect, how many lives we are changing by just simplifying exactly how we trade, how we do things. Because trading doesn't have to be complicated. Trading is one of those things that, as we said last night, it is way too overcomplicated. There's so many different ways of trading. There's so many different brands of doing it. And it's all about what's the trendiest way, what's the smartest way. The best way to do it is to make money. That's the best way to do it. The best way to do it is just in a way which you can physically understand. Now, just put a comment in the chat for me, because what we're doing is with a second day of an event, I'm assuming everyone that was in here tonight was at the event last night. So, because what this event is not going to be is me kind of recapping everything we spoke about last night. We're going to do a quick little, okay, let's just see how it works. But I need to add a couple of extra things into this just to make this completely bulletproof for you. And there are two things, or actually multiple things I'm going to be giving to you tonight. Obviously, it was obvious that I made what is, in my opinion, the greatest offer any trader, any educator out there has ever made with the introduction to the academy, to the school program. I've also got more surprises for you. And I've said from the day dot of doing this that I'm going to give everyone something for free. And the only people who are going to be able to have that thing for free are going to be the ones that are live watching it. So in the next hour, I'm going to be telling you exactly what that is for free. And it's something that really, really excites me, if I'm being completely honest. And it's only going to be available to people who are on this live stream. Nobody else. I am not going to be offering this to anybody on social media, on email, or anything like that. So this live present you are going to get is only available if you are here. So first things first, let's go and just do a quick review of everything. And I want you to just talk in the comments. Have you done any practicing today? Have you done anything with regards to market structure? Have you had a quick look? If you understand market structure, and don't get me wrong, we're gonna talk about the charts tonight. So it's not like we're not going to talk about market structure. I'm just not going to give it to you from the very beginning. Key levels. In terms of key levels, the key level we're going to be focusing on in this literal example is going to be an imbalance, just an area of imbalance on either a daily time frame or a 4-hour time frame. We're then going to be focusing on trading ranges. So from that specific key level, we want a trading range to form from that level. And then from that trading range, we need to identify a premium level and a discount level. And then obviously we pull the trigger with regards to our OTE. This is this basically, it makes the strategy It makes the edge that you hold within the market mechanical. And I want you to, and I had this conversation with someone earlier, because I want you to imagine if your brain was a machine and the only thing you had to do was enter at 71% of the level we spoke about last night, of the range that we spoke about last night. If you only had to enter at that level, how would your results be in comparison? So example, if we take this trade right here, this is on gold, and this is happening kind of as we speak. I've not set this trade yet because obviously of the time of day it's quite late in the trading day, so it's obviously not going to do much today. But if we just go through everything in here, now I'm not actually a trader of gold, but let's just look at the daily time frame, because there's a couple of things we're going to cover here. Firstly, you've got this as a daily time frame, and I can identify already we've got a key level. Now, if we go down into a couple of time frames, this is a 1 hour time frame now. And the next thing I noticed from this specific key level, price action is doing something very, very simple. Price action is pushing to the upside. So from that, what we're looking to identify here is there any other reason to think this could work? And you've got another key level playing out right now. And from that key level, we have been able to establish a trading range low, and we've also been able to establish a trading range high, which means from that area, we can get our fib tool out and we can measure this tool. Now, very, very quickly, because I know there's a lot of you in the comments that are asking me, sorry. Take a picture. Okay, I'm going to leave this for 30 seconds. Take a picture on your phone. I do put these fib levels in and around everywhere, but just whilst we're here, for the purpose while we're here, take a picture, because these are the exact levels that I use. They are not in the same levels that somebody like ICT might use, if you know who he is, or other traders, creators might use. These are levels which very, very simply work for me. And I've inputted all of these levels to give me this result from a trading range. And the only thing I'm interested here is really 50% of the trading range, because if I know there's 50% of that trading range, you have got a premium level, which is above 50%. And then you have got a discount level, which is below 50%, all the way down to the bottom. So that there is going to be your discount area. And inside the discount area, where in this example, we're looking for buys, we're taking a trade inside our OTE level area. Now, this is where I spoke to you earlier about the mechanical side of things. When you're a trader, the job here is very, very simple. Enter at the 71% level of the trading range, targeting the top of the trading range if you're buying, with your stop loss below the trading range low. So at the trading range low. Someone said to me, well, should I put my stop loss a little bit lower? Should I do it here? Should I do it here? Or should I go really tight if I want to get a really good trade? Here are the things that you have to consider. All we're doing is being very, very mechanical in where our stop loss goes. Bottom of the range. So in this example, your stop loss is bottom of the range. Now, with a take profit, in this example, of top of the range, and therefore an entry at this specific level right here, which is 71% of the trading range. Does that therefore mean that this is mechanical if we stick to this every single time? Because this is going to give us the risk reward. It's going to mean if you risk £100 down here, you win 200 back. Meaning you've now got a strategy which allows you to lose half of your trades, even lose 60% of your trades, but still make money over time. That's like dream scenario for me. Like completely dream scenario, because it means I can F up. It means I can make mistakes. And there isn't many industries out there which allow you to make mistakes. So in this mechanical mindset, if you were a machine, if in your brain you were thinking, right, now I'm the machine, how would you approach this? Would you just do it? Your machine brain would take it every single time. If you took all of these setups from these levels, is there anything that you could do to make this easier? Yeah, just take it and put your stop loss at the bottom, your take profit at the top, your entry at 71%. That's all I'm asking you to do. And it is literally that simple, from identifying a key level, a key area. Now, I'm also said I'm not going to go into replay mode or anything like that. But there is one thing I think that can make the strategy as a whole a lot easier. So I want you to imagine for me that you are trading in a higher time frame, and you've identified, let's just say, a key level randomly is here. So we know this is our key level. All right. So from this specific key level, what do we have? We have identifying the trade. Now, the move I'm looking for is actually more specific or more particular, because from this specific level, I want you to identify something. I want you to look at something here. This is not, for me, a valid trading range in this particular example. The reason this is not a valid trading range is because we haven't created a new low. So that would mean that this high here and this low here is the most recent leg, meaning what's likely to happen is price action could easily just break and continue moving lower and stopping you out. So what we need from this trading range to be a trading range is actually to create a new low. And if we create a new low, which is right there, and in this process, we break structure, all of this bearish structure here, and create a valid high with our 3 candle formation, which we spoke about yesterday. And by the way, the recording for yesterday is already on YouTube. I'm actually going to break this down and put it in the school community in bite-sized lessons as well. This will give you a trading range. Now, the specific movement with a trading range, which has happened right here, is that we need basically a sweep of this particular low. Now, this, you can call this a liquidity sweep. You can call it a sweep of the lows. I don't care what you call it, to be quite frank. To me, it's a liquidity sweep. If we can have that liquidity sweep, so in this example right here, we can identify price action came into this level, and look at the relationship here. Let me just delete everything. Bring back this area of inefficiency right here. And you can see that this downward candle came down and swept below all of these lows right here. Then it created this low. Now that, for me, with a 3 candle formation and a 3 candle formation up here, is like the perfect trade. And this is, I don't usually trade gold. And I'm telling you now, this is a trade idea that is sitting right in front of you. You can take this trade. The only shame of it is that we're at Friday, quite late in the PM session. What is it now? 7:20. And it's just not the right time to trade, really, right at the end of the week. But this is a trade opportunity. Now, I delete my fib levels once I got my OT level, just to keep things as simple as I possibly can and to keep my chart clean. So I know that this is exactly where the whole process is going to be. And that's it. This is what you're going to go away and do. This is what you're going to have to understand. Now, I don't use fancy terminologies to identify a trading range. I'm not going to call this a dealing range. I'm not going to call this an MSS, whatever it is, market structure shift. I'm not going to call this anything other than what it is. It's just a trade idea. It's just, look, guess what? I think this is going to go higher. And because I think this is going to go higher and I've got a trading range out of it, I'm going to take a stab at it. And guess what? I'm not going to win every time. Sometimes I'm going to lose. Sometimes you're going to get trades which literally come into your entry here and go straight to your take profit. So they take your stop loss. Put in the chat now, has that ever happened to you in your trading career? How many times has it happened to you when price has swept lower, in this exact example, stopped you out, and then expanded to literally smash your take profit within seconds of doing it? Listen, this is going to happen to you all of the time. I can see a lot of you are saying, someone said many times again, and it will happen many times more. It will happen many times more. So we got to get used to that. And that's why we use risk reward, because this basically means we don't have to win every trade, which means we're allowed We're allowed to do it because you don't know if this is going to win or not. Nobody knows. No amount of analysis, no amount of order flow, market mechanics, nothing can tell you if this is going to win or not. Like nothing. Okay. And this is just one trade idea. I could scour through the markets right now. And I think someone made a comment yesterday saying I'm literally pulling out examples out of thin air and they're happening. Well, if we just do a little bit of live price action analysis now, the one thing I note here is that basically price action created a really heavy move with this candle. This was NFP today. Now I don't trade NFP normally because this is exactly why, because the market will manipulate higher. It will then manipulate lower before deciding what it wants to do. But based on this, and I'm going to talk about this in a minute, we have this particular movement right here. Now this particular movement right here has basically enforced that this is likely to continue moving to the downside, because if we've created that wick. And equally, I want you to focus on the body closure. The bodies have not closed bullish. So basically, you've got permission to take this thing even lower. And from this level, from this sweep of this high on this news candle, price action actually broke, swept above these highs. And look what it did. It created another trading range, this time bearish. So in theory, there's actually not a whole lot wrong with taking this particular trade right now. You could, if this was a New York session or a London session or something like that, you could take this. You really, really could. If we go to GU, similar sort of situation. Now, again, we're not working out of particular key levels in this example because of the imbalances, but what we have done is we've swept higher from this level. And we can see here, this is a 3-hour time frame. And by the way, I'm doing this right now off the cuff. This isn't planned. I've not pre-made or done anything. I'm doing this live with you now because I can see we've actually working out this area of imbalance, which is sitting right here. And from this area of imbalance, this was the news candle that swept above all of these highs. That's good. We like to see that happen. And we like to see that sweep of these highs because that's manipulation in price. If you have a look at exactly what happened here, there's another area of inefficiency right there. And that is between the wicks. Look how precise that is. Price action comes higher, sweeps into that area of inefficiency. When it sweeps into the area of inefficiency, it dumps to the downside. The body closure of this candle is really, really important. And I'm going to talk about body closures because basically when you have a closure, which is sitting right here, we basically have an area of imbalance, the body's closed. This basically means that imbalance has still been respected, which means I can look for bearish price action to still happen. So now my plan based on this particular move right now is to just go down as a couple of time frames and just see, okay, is there any type of trade idea that I could potentially see playing out? And even here on a 15-minute time frame, you can see a lot more obviously. We've got the sweep of this market structure, which is here. Price action has then created the trading range after tapping into that area of inefficiency. So now my only job is to identify, is that a valid trading range high? Yes, it is, because this wick is above the 2 wicks either side of it. Cool. Is this a valid trading range low? Yes, it is. Why is that? Because this wick is lower than the 2 wicks either side of it. So the job is very mechanical now. Trading range high to trading range low. Fib levels. With our fib levels, we are highlighting 71% to 88.6%. They are going to be, that's your OTE level area. What that means is optimal trade entry. You can enter anywhere inside there that you want. I like entering at 70 to 71%. And this is a trade idea right now, right in front of you. I've literally found this on this stream live with you guys. This is what I do for a living. This is my job. This is what has allowed me the chance to give everything I can to my friends, my family, my loved ones. And this is going to be exactly what does that for you. This is going to be the thing that unlocks everything for you. I'm not doing this on a 1 minute time frame. I'm not doing this on a 30-second time frame. I'm not doing this really, really quickly. And look, that analysis, you can put it in the chat right now. How long did that analysis just take? This is live market. I'm not going to take this trade because of the time of day, or I might even take it just to kind of prove something. But this analysis that we see right here is live. And it took what? 5 minutes, not even that, to do the analysis. So that's how quickly you can do your analysis. You could do your analysis in the morning and you could work out what you think is likely to happen. And what I'd like to do actually, in the chat, pick a pair, any pair you want that is within this list right here. And I will take a random one right now. And I've not obviously planned this because you're in the chat now. Pick a pair. Pick a pair. And I want you to, and I'm going to take the most popular one. I'm going to take the most popular one. Okay, so we've got a lot of USD JPY, USD CAD, Euro USD, Aussie. Okay. NASDAQ, US 30, gold. Okay, they're all coming in very, very fast right now. I don't know which one to pick. Let me just go. There's a lot of NASDAQ. There's a lot of NASDAQ coming in. There's a lot of Euro, gold. Oh my God, these comments are coming so fast. Wow. Wow, wow, wow. Euro, USD, JPY, NASDAQ, Bitcoin. I'm not doing Bitcoin. Silver, NASDAQ. Looks like NASDAQ's winning. Okay, we'll do NASDAQ. We'll do NASDAQ. Or actually, no, I'll do a different one first because I always do NASDAQ. All right, USD CAD. We'll do USD CAD then. And then we'll do NASDAQ after. So there we go. Right, USD CAD. Let's do this from the top down. And then we'll do the NASDAQ after just because everyone said it. Now, USD CAD from a higher time frame perspective is reacting out of this key level right here, area of inefficiency. So the likelihood, but it also, as you can see, is bullish. Now, if we look at USD CAD, let's just measure this range right here. That there tells me this is probably going to go higher, despite the fact that we're inside this key level. So this is market structure versus key level now. Market structure is at the top. So even though we're inside of this level, we've also got another imbalance, which is here. But mainly I'm focusing on the fact that we're inside this trading range level now. So in theory, this could go higher. From a weekly perspective, that's exactly what we've done. We are coming into this area. And this is going to bring us down to how we identify the bias that we're basically going to pick. How we are going to talk about which particular way we want to move with price. So based on what you see here, this is daily time frame, meaning every single candle you see represents 1 day worth of price action. With that in mind, what direction do you think this is likely to move in tomorrow? To me, I would imagine this is likely to continue moving higher until I am basically told otherwise. Because basically, when you have a bullish candle, which is obviously sitting like this, when you have a bullish candle, when the next candle opens, it's the wrong line. When the next candle opens and closes really, really bullish again, this is the thing you have to understand. Price action, why would it reverse? Why would it suddenly just dump? So we have reason to think this is probably going to go higher. So the only thing I need to do now, in this example right here, is just mark out the range that the daily time frame has created. So in this example, even though we're leaving behind this imbalance, I'm not worried about this imbalance right now. I'm not worried about that as a key level. I tell you exactly why I'm not worried about it. Because we're not there. So many people will lose, or so many people will not, what's the word? So many people will not take a trade, will find an excuse to not take a trade because they'll think there's a problem with the trade. This candle has moved higher. That means there's a lot of buyers in the market. That means there's a lot of momentum upside. And again, I don't care that there's another key level to the left. I'm not interested in that. I'm interested in what is going on in these series of candles right here, because my job, I'm a day trader. So I want to be in a trade pretty quickly and out pretty quickly within the day, ideally. And the trade I'm looking to take is based around guessing the daily bias. Now, based on that, I think there's likely to continue moving higher. We've also got this imbalance. And if it comes into there, I will worry about it after. So if we mark out, for example, this daily low, let's just imagine, I know we've got an hour, 2 hours till this candle closes, but let's just imagine that's the daily candle there. Right now, I'm just going to go to a smaller time frame. And I can see on a 4-hour perspective, we're continuing to shift to the upside. We've created this nice little low. We're continuing to move higher. So now I'm just looking to find a key level with trading. If this is going to continue moving higher. So let's just say, right, there's an area of imbalance sitting right here. So even though this is quite high on this 4-hour range, and we've equally got a lot of reason to think price action could easily come lower down to here. I'm looking at this as a specific key level, and I'm going to show you exactly why I'm doing that, because it's very, very simple. If this here is a key level, that means on a smaller time frame, I'm going to wait for price action to come into it. So if price action comes into my area and continues moving lower, okay, continues moving lower, what am I going to do if this situation happens here? What this basically means is I'm not going to find a trade. There's no trade. So this is why I wait for a trading range to form out of that level. If price action comes into here and does that, well, then I have a trade. That is all I do. Finding key levels on higher time frames and waiting for them to play out. If price action does this after, which happens, again, that happens a lot, then it means I lose a trade. It means I lose a trade. That's all it is. I've got my stop loss there for a reason. I've got my stop loss there to protect me. And that's the only thing I'm doing, which is going to help me. So I'm not interested in the rest of it. But 9 times out of 10, it won't happen. It will just continue moving lower. And in which case, if we do start to get this sort of pattern happen, at that point, I'm going to start thinking, okay, yeah, now I'll look inside here because we didn't get the trade opportunity in this particular instinct. So if this daily candle right now was to close really, really sharply to the downside and create a very, very bearish wick, I would be looking for that to potentially come lower at that particular point. But right now, I think this is going to go higher. And I'm just going to mark out this particular level. So the trading range idea would be that price action, and actually we can see if we pinpoint this a little bit closer, that area of imbalance did get slightly tapped into. Price action moved higher. So from that level of imbalance right there, we created this move. Now, something that's really, really important, which has happened here. On a 1-hour time frame, we've created this new low. The reason this is a low is because this is a 3-candle formation. What I mean by that is this wick is lower than the 2 wicks either side of it. And because it's lower than the 2 wicks either side of it, that's a trading range low, and now we have a trading range high. This trading range high is not actually a valid high right now, because we don't have 3 candles to call it a 3-candle formation. Okay, so I'm essentially monitoring this as a trading range. So if this created a trading range high, I would basically be measuring that level there. And on a 1-hour time frame, that is technically a trade again. You could take that. Maybe you don't want to take that. Maybe you want to go to a 15-minute time frame or something like that, and you can see price actions just continuing to move higher. And in this example, again, you can see that price action's just pushing again. So maybe you're looking for some form of retracement, but from a higher time frame, generally, it will make a lot more sense to you. So right now on USD CAD, I'm looking at it thinking, it's probably going to go higher. And the very simple thing is I'd wait in here. So there you go. I've just given you the bias on USD CAD. Now, someone asked about NQ, NASDAQ. If I'm trading NQ, and this one is, again, very, very simple, we can look at this from any sort of level. And you can see, okay, look, price action has swept into, this has actually swept these lows, which are sitting right here. And price action has broken to the upside from this level. Okay, so from a daily perspective, this is actually looking incredibly bullish right now. From a weekly perspective, we're kind of in the middle of a range, which is why it's not been the most amazing price action, because this is a high right here. This is a low. And it's just not really moving out of it. So from a daily perspective, we're trying to push our way out of this range very, very slowly. We have got this area of imbalance that we are still kind of respecting. The body has closed lower than it. And then price action is just pushing to the upside from this level. And this again was news candle today. Price action swept it and continued to push higher. So now I'm looking on a smaller time frame. Is there anything in here that I can see? I can't really see a key level. So I need a key level of some sort of form. Ideally, this candle kind of closes where it is and creates some sort of imbalance there. And what I would be looking for in here is basically price action to come in and maybe give me some sort of range movement higher on a smaller time frame. Again, we can do this on S&P. You can see we've done the exact same thing because these price points move in the exact same way. S&P is currently working a lot more bullish out of this area of inefficiency. There's a gap in there as well. But again, try not to overcomplicate things when you talk about gaps. I cannot stand the phrase new week opening gap or new day opening gap or any of this crap. I just look at price action for what it is. It's just inefficient. So I think price action's come into this area. It has pushed to the upside from this area. So I'm bullish, basically. And it looks like it's actually creating something which I'm going to go over with you very, very shortly. Now, you can see price action is pushing higher. So smaller time frame, again, you can see that it has respected the range, continuing to move higher. It respected this inefficiency. Price action came into it and then creates a new range. From that range, you can see it's actually tested the same range and continuing to move higher again. That's on a 4-hour time frame. Okay, that's on a 4-hour time frame. So now this was the news candle. It doesn't always happen like this every week. This was a particular news candle, but the fact that we have created a new low means we have a new trading range low on the 1-hour time frame. And now something very interesting is happening. This is live price action. I'm reading this to you in real time. We have an area of inefficiency sitting there that price action has come into. And from that level now, as long as we get a trading range form in which it looks like we have from this sort of level, that could be a trade. So the trade idea would be something like that. You could enter at 71% to take this a whole lot higher, simply because it's reacted from a key level and it's created a trading range. In this example, it looks like it's going to come into this imbalance instead and then continue pushing to the upside. And that happens. Sometimes we don't get triggered. Sometimes we don't get triggered, and that's completely okay. So I'll do one more pair. So someone asked for USD JPY. Again, I love USD JPY as a pair. I haven't loved it this year as in 2026, but overall, this is a great pair to trade. Now, USD JPY for me, from a weekly perspective, is bullish. Again, look at that area of inefficiency. It's not a coincidence. So now I'm understanding, okay, this is likely to just continue moving higher. Target, realistically, based on what we're doing, is this high right here. I'm using that as a target. It looks like it's heading somewhere. Where could it possibly go? Let's just call that a target. It's the next available high on our left. That's what I'm looking for. Now, from a daily perspective, you can see that price action expanded really, really heavily to the upside. And from that imbalance, we created another key level. Not only did we create a key level, we actually came into the discount area. We didn't quite come to the 71% level, but I don't care about that on a daily time frame. I'm just observing discount and premium. Because basically from this key level, we're continuing to push higher. So this is the key level that you can work out on the daily time frame, area of inefficiency. Now, if you go to a smaller time frame, a 4-hour time frame, what's happened from here? You can see that price action has started to create a trading range. This trading range, you can see right here, we swept under, just about under this low right here. It's really hard to see, but hopefully you can see it. Even so, you can even look at the fact that it's swept below that previous candle, and it creates the 3 candle formation for the trading range. And then it also creates the high right here. So the trade idea on a 4-hour time frame from this level, if you are a swing trader, so if you've got a job, you need to go to work, whatever, can be at that 71% level. That could be 71%. So that's an amazing trade. You could have taken that in the London session. So if you're going to work at 7 o'clock in the morning or something like that, 6 in the morning, you could do the analysis. You could take the trade based on what you see, and you could come out at the end of the day, round about here, 6 o'clock in the evening, if you're home with the kids, whatever. And you can see that you've made money on the day without looking at anything. But people aren't ready for the conversation of setting and forgetting yet. That's a harsh reality of it. And I guarantee you, when you realize setting and forgetting positions is actually going to be a massive secret to getting you profitable, you're going to really kick yourself, because trust me, it's the way. So if we look at this on a smaller time frame, let's just say you are a day trader and you want to try and get in things on a smaller level. We can see that price action now, as of right now, has reacted out of this area of inefficiency and just expanded to the upside. So again, the thing I don't like about this is the fact that, again, we don't have a closure or a wick below this low. So this is the trading range low, which is sitting right here. Okay. Based on that, we've also got the trading range high. Now that, I don't like that, because I would have wanted, in an ideal world, this wick to actually do something like that. Just create the manipulation by sweeping under the specific lows and the body respecting it, and then pushing to the upside. But again, this never gave you a trade opportunity, so there's no point even thinking about it. Until obviously today, with regards to the New York session, by the looks of it, what happened here, and I haven't looked at this pair today, but what I can see right in front of me right now is this area of inefficiency. And the fact that this was a news candle, this was NFP. So price at NFP, and for anyone that doesn't know what NFP means, is price. It's basically a high impact news event, and it's one of the most high impact news events of the year, and of the week, of the month. Sorry, the year of the month. And basically, what this tends to do is create a huge amount of volatility, where traders really, you can trade it, but in my experience of trading it with heavy lot size, I've been slipped out with a CFD broker before. So where I've gone to risk, let's just say £2,000 on a trade, I've actually lost about £6,000-7,000 because price action moved at such a speed. My broker couldn't get the information to the live feed, which meant I lost loads of money for it because of how fast price went. And that's what happens quite a lot with NFP price action. And you get a lot of manipulation. But what it is good for, in my opinion, is helping you with the bias for the next trade. So this was a 1 hour time frame. And with this 1 hour time frame, I can see that we've come into this area of inefficiency. Now, you can see that price actions traveled higher, come into here, and then expanded to the upside. So you've got now a trading range low, and this low has swept below the candles to the left of it. Great. After that, this one candle on its own engulfed the entirety of this whole move. When I say engulfed, I mean this blue candle body closed all the way up here, engulfing all of these candles. It like swallows them up basically, and then continues to go higher. So now that is a valid trade, because you've got a trading range low, a trading range high from a key level. There's not a lot wrong with taking this setup. So there's another trade idea that you could have. This could be your trade on Monday morning. You could wake up on, and this isn't financial advice, goes without saying, it's in the description, but you can, this is education only, but this could be potentially a trade idea. There's not a lot wrong with it. I don't care about this, what if it goes lower? What if it goes lower? Then you lose. You should only risk what you are comfortable losing. That's what you got to remember. What if it goes to that imbalance and I was wrong? Then you got to drop your ego. You were wrong. Doesn't matter. But that's why we use 1 to 2 risk reward. We use 1 to 2 risk reward because that's the best and most profitable way to do it. Again, I don't really trade gold, but in this example in gold, from a daily time frame perspective, you can see that we're working out of that key level and it's continuing to push higher. It's very bearish from this front, but this is just a lot of manipulation, in my opinion anyway, because when you go to a weekly time frame, it's overall bullish. When you go to a monthly time frame, obviously bullish. 3-month time frame, 12-month time frame, the whole thing's just bullish. So for me, I'm looking at this key level and I can see a huge reaction from it. Now, this is important as well because we've created this low, and this low has created a wick, and the bodies have supported that area of inefficiency. That's helping me with my daily bias. So that means the next candle ideally is going to go higher. So now when I look at where this current candle is closing, if this candle closed all the way below these bodies right here, so if this candle closed under this opening price, for example, and we created a huge bearish wick, and all we actually did was sweep above this liquidity or these highs, then I would be thinking this could go lower the next day. But it's not relevant because we need a key level. And from these areas and key levels, that is all I am really focusing on. So from this particular key level, that's bullish. And then we have a trading range. So from that specific trading range, this is another trade idea I've put live in front of you tonight. Probably 4 or 5 potential, well, actual real trade ideas. And that's just a mechanical way of entering 71%. Stop loss below the low. Targeting the high. Why are we having our entries here? Because it allows you to enter the market for a 1 to 2 risk reward. Why do we enter at a 1 to 2 risk reward? Which means for every 100 you risk equals 200 back. It means you can lose trades. And we have to accept that we are losing trades. I've been talking for a while. I'm sorry. So hopefully you guys are still with me. Hopefully you understand. I'm going to crank it up one small notch just to help us try to simplify and make life a little bit easier. Now, the next thing I'm going to talk to you about is not something you have to take away and do. And I always say to people, if you are a trader and you've found something that works for you. So for example, what I've shown you here with regards to market structure, with regards to key levels, with regards to trading ranges, with regards to premium and discount levels, with regards to optimal trade entry, and with regards to bias. If you get this 100%, then you do not need to do anything else ever again. There are other things you can do to stack this probability of a trade. Does that make sense? You don't have to if you don't want to. There is one confluence I personally like to use. And like I said to you, I'm not gatekeeping anything. What I teach is the same on the mentorship side of things, inside the academy, at my live events, at my in-person events, on the YouTube events, free on YouTube. What I teach is exactly the same. Okay, so with this is the model which is going to completely set you apart from anyone that you know. But if you want to crank it up and know a little bit more, then you can start looking at something called divergence. Now, divergence, very, very simply, is a tool that is used to assess the strength between correlated pairs. It gives us a confirmation of a liquidity raid, basically a high or a low. And divergence basically should be used as a confluence only. So I'm going to talk to you about divergence, and then I'm going to give you a tactic for passing your funded accounts. So again, this is something you need to really stay for. Okay. Everyone's still with me in the chat. The reason I look to this side over here is because I'm looking at the chat basically. So what we have in this example, hopefully you can see my cursor. I think you can. When you have this low right here, price action creates a high and then sweeps below that low. That means liquidity has been taken, lows have been taken, same here. This is 2 pairs. Okay, this is 2 pairs. I want you to think of this as Euro USD and Pound USD, or if you're a futures trader, NQ S&P. Okay? Relative strength. if you see Euro USD in this example sweep the low, but you do not see the same low that should be swept get swept, there is divergence happening. So basically it means that one pair is unwilling to go lower compared to the other pair that is. And this is a sign of a potential reversal in the market. And I'm going to show you examples, so don't worry. One pair is basically making a run on the low, and the other is showing a relative strength to move higher, meaning you can look for buys on this particular side. So now it's inversely correlated pairs. This is where it stumbles a few people. I want to be very clear once again. If you don't understand it, there's no worry about it. I've got loads of YouTube videos which you can watch that will really explain it. And I'm actually doing a divergence video in detail, so you can watch it on YouTube when it's out. But basically, imagine this is something called the DXY. And I'm going to show you what I mean in a minute. And then imagine this is Euro USD. And the reason I'm using DXY and Euro USD is because basically they're two pairs which correlate pretty much identically, but they move in the opposite direction to each other. Meaning when one low is taken, the high on the opposite pair has to be taken. And if that happens, we have no divergence in place. Both pairs are moving in tandem with each other. Inversely correlated means if liquidity or low has been taken on this side, but the high that should have been taken has not been taken, this is divergence. Okay? So in terms of correlated pairs, you've got Forex pairs, you've got the DXY versus Euro and Pound. That is your inversely correlated pairs because the DXY moves in a different direction to Euro and Pound. You've then got indices, index. You've got the S&P versus the NASDAQ versus US 30. They're pairs that should correlate with each other. You can look for divergence between those pairs. You've then got crypto. You can look at the relationship between Bitcoin and Ethereum. And that, if you are a Bitcoin investor or an Ethereum investor or whatever you are with crypto, can help you making those decisions. If you are into metal trading, you can compare gold versus silver. So an example of what it would look like is a specific low, which is sitting right here. The same low, this is NASDAQ. You can see on my cursor here, the NASDAQ on the 4-hour chart right here. This is S&P and this is US 30. These are three pairs which should correlate together. And I will show you some Bitcoin examples, don't worry. What we have is this low is the exact same as this low and this low, which means the same price action should be happening on all three pairs. You can see that this low was not taken. This low was not taken. On US 30, the low was taken. And after that has happened, what did we get? We got an imbalance in price. I haven't highlighted it for some reason, but there's an imbalance in price here. There's an imbalance in price here. And there's an imbalance in price there. They're key levels that you can focus on. So now, after a key level is formed on a 4-hour time frame, and I don't like divergence on the 1 minute, 5 minute, 15 minute. I like divergence to be happening on the higher time frame because it allows you the chance to make a smarter decision, basically. But this is going to allow you to basically identify price action. So if we were to, and I know a lot of you have asked about Bitcoin and Ethereum and the difference between them. So I will pull up the Bitcoin chart. And I'm going to do, well, we have this layout set up on TradingView allows me to basically pick here. So I'm just going to open two charts, which mean now I have on one chart, on one side, I have what? Bitcoin. And on the other, I've got Ethereum. And this is amazing, like, because I can see divergence right now. I've literally not, this is not like, you're going to sit there and think this is staged. I'm telling you, this is how powerful it's not. How powerful it is, because it's just mental. Like, this has happened in the last, since the New York session today. Like, this is just crazy. But anyway, this particular high, which is sitting right here, is Friday at 1 o'clock today, 1 o'clock in the morning. So this is the same high. We need to find the same high. I want you to look at what is going on. The same high has been swept here, but not here. Okay. So what this is basically saying is that it's actually stronger, that price action is likely to go lower at the moment. At the moment, because there is a higher relative strength to the downside on Ethereum, which means if you're looking to sell a crypto, you would want to sell Ethereum, because Ethereum is the one that is basically showing you more of a willingness to go lower in this live example right now. This is a live account. I trade from this exact account on AMP on futures live. You could take, if you've got a crypto account, you could take this if you find a trade. Now, what you have from this example is a potential for a setup. And and this is the thing you have to consider now. The setup has to form after you find divergence in price. So based on a couple of things that are happening here, you can see that the 15-minute has started to break structure to the downside. With regards to the same on here, if you could even go to a 5-minute time frame, and you can see that we've started to create price action moving lower. So now the way I would be observing this is identifying if what I would want to see happen, just to confirm this is going to go lower basically, is I would want to see price action close lower like that and leave behind an imbalance. If we leave behind an imbalance, this is just divergence, which is going to be stronger and higher in probability. Another thing I want to basically show you, because what's really, really powerful about divergence is that you can kind of have a heads up on it. And I don't necessarily use it for quote unquote like trade ideas. I use it to basically help me determine the likelihood of something going to dump to the downside or not. So you can see Bitcoin since 2022 has done what? Has just been plummeting higher and higher and higher. I don't know if anyone here invests into Bitcoin or not. I personally don't. But again, if we look at the relationship between what's actually going on up here, this kind of told you that you could have predicted this happening. If we look at the specific high, this was the all-time high created in October, where everyone thought, yes, look at me, I'm going to make loads of money, I'm rich, whatever. Well, if we look at what actually happened here, this high was swept in this example. Okay? And then the same high, which should be swept, is right here. And it has not been swept. You can see there. What you are seeing in front of you right now is a prediction of what's likely to happen with crypto. Because crypto dumps to the downside really aggressively at the end of last year, October 2025. Now, are you telling me that the fact that there was divergence in place, bear in mind this is a weekly candle, okay, and this is a weekly candle. Are you telling me that price action, bear in mind you have a whole week to decide this, is going to suddenly just keep pushing to all-time highs? People put money into Bitcoin all the time, and they don't look at price action for what it actually is. This is giving you right here information on a chart, which is telling you this Ethereum right here, and these are two pairs, Bitcoin and Ethereum should be closely correlated together. They should be doing the same thing. And it is no coincidence that divergence has happened in the market and price action has swept to the downside again. So if I was looking to invest in one of these particular pairs with someone that understands price action, if I was on a simulated account or whatever and I was looking to push price higher, and I wanted to think, right, I really want to do this. Guess what I would wait for? I would wait for price action to do something like this. And what I mean by that is this. I would want divergence to happen again, but on a lower time frame. I would want Ethereum or Bitcoin, doesn't matter which one. I would want this particular low to be saved. I'd want it to go, I wouldn't want it to come lower, basically. I would want one of them to be taken. The one I would look to invest in this case would be Ethereum, because I would want to take this higher. That is when you know we're going to move higher again on one of these pairs. So yes, at some point, crypto is going to get to 130,000. I categorically promise you, if you're sitting here today and you think I'm not getting this right now, or I don't want to get this, if you're someone in the comments that just hates me, but you're still watching me because I'm in your head rent free, whatever it is, I don't know. One thing I can guarantee you is if you see all-time highs again, let's just say you see all-time highs here, you say all-time highs here. What I want you to do is very, very simple. And I want you to write this down right now. Okay? I want you to look at the last low that happened. All right? I want you to look at the last low. And I promise you, and I want you to tag me and tag me in I want you to tag me. I want you to talk to me on Instagram, message me in the school community, whatever. I want you to show me the last low that was created. And I promise you, there will be divergence that caused it. It will not do this. It will not save both lows and move to the upside again. It won't. It won't. It will. One of them will sweep the lows. One of them won't. And then it will go higher. So when it gets to all-time highs again and everyone gets excited and starts buying up here, look at the low. And just think, now you know this little golden nugget. When price action starts pushing higher, you can buy down here instead because you've just seen divergence. You know, we can look at so many different pairs. And again, we can correlate pairs together all of the time. That's the wrong thing. That's why I've got that up. There we go. So again, you can see there's no reason to suggest at the moment that we're going to come lower for the long term. But if we look at this from a weekly, if we go to a daily time frame here, just to make it a little bit clearer, and we go to this time frame right here, I want you to look like this, because again, when did this happen here? I know this is an old chart, but when did this happen? Price action did this, didn't it? The same high was swept. It's divergence in price. You know, we could go, if we open up the live chart, this is the one I trade today. And again, you can see, and we can try and find some divergence, which is happening right in front of us right now. And usually what I would do with indices is bring out 3, because basically I would want to include the 3 pairs which are going on. And already, if I just get the 4-hour time frame up, what can we see that happened here today? So let's just look at this very, very carefully. I want you to look at the Dow right now. Okay. And I want you to understand this low. Compare it to, let's look at this low here. This was yesterday, Thursday. That low there. Now look at the same low. And now go to this low here. Should be the same low, which is here. And what happened? The Dow sweeps below all these lows. And what happens here? This happened today. That's divergence in the market. And now you can go higher from this area. So if we go to a higher time frame, you can see this is a trading range that's been formed. So now if we come to this trade opportunity, which is here, and then we go back to a smaller time frame, predominantly around the 1 hour time frame, you've got the backing of divergence at your disposal. That's how I'm using divergence to basically frame these setups and become a lot more confident in these setups, basically. That's all it is. You know, again, I'm sure I could find it somewhere on euro and pound. Let me just bring two pairs up to make it a little bit cleaner, but I'm sure I could. It is probably everywhere in the market. And again, like someone made a comment on the live yesterday saying he's literally just throwing out loads and loads of different examples. Like I could do this till the cows come home. So that's divergence in the market. Does everyone understand the premise behind it? Does everyone understand the reasoning behind it? The only thing I will show you in this case right here is, and this is another important thing, is basically the US dollar, the DXY. Now, the DXY is the exact same price action, as euro. So if we utilize euro, you can actually see this is kind of making the exact same moves right here. Now, what I'm going to do actually, I'm just going to bring it to 2, and I'm just going to bring the DXY because I'm going to show you an example I think is here of, I think there's an example of inversely correlated pairs. So the DXY swept below this low here. So this was the other day, right here. Now, in theory, this low means on euro, this low should be swept. The high should be swept. So the high I would be looking at, if this is on Friday, the 2nd of January at 4 o'clock UK time, then I'm going to mark out the exact same high. You can see that euro never swept above it. Euro respected it. So because euro has respected that high, we've got divergence. What is the divergence telling us? One pair is unwilling to go above or below said highs. In this example, the DXY has shown weakness by sweeping the low and then pushing. Euro has shown strength to the downside. That basically means what I'm seeing here is this low as my target. So with the low as the target, I've got permission to sell into it, basically. And my only job is to look for and identify key areas. And again, you can do this everywhere in the market. You can see key areas get respected as and when they go all the way down to these targets. Even as far up as this one right here. You can see price action respected it, continues moving lower. You can start looking for those trades. You can see price action comes down again. You can measure the last trading range high to the trading range low. The trade opportunity can be from that area there, just like that. Obviously, we're not looking to go for a 1 to 4. We just want to get to the trading range low. That is it. So you don't have to use divergence with it, but you do have to, well, you will consider it when you need to consider it. I promise you. So the biggest question now is, how do we pass? So now we have all the information, which is here. Market structure, trading ranges, premium discount, OTE, bias, divergence. This is what you've already learned in like two evenings, not even 2 full days. It's mental how quickly you guys have gone with it. Like, you should be really, really proud of yourselves for doing it as well, by the way. So congratulations. But we want to know the big question. And this is going to tie in to what I've got for you for free today. Because basically, there's something that's going to happen and it's going to help, basically. But how to pass funded challenges. So there's certain things you have to do when you have your funded challenges. Now, to pass a funded challenge, the reason most people fail them to begin with, and for anyone who doesn't know, funded challenge is not a way to oversize, over leverage. People go very, very heavy when it comes to funding accounts. You see a lot of YouTubers, a lot of influencers say, oh, I'm sizing up and all this. And that's because they don't tell you about the amount of money they spend on the challenges they blow. They tell you about the ones that they pass. So based on that, how do we pass a funded account? It comes down to how much you risk. And if you risk 1% of the entire account. So let's just use an example. Example account size of £100,000. Okay, so your total drawdown in this example is going to be $10,000, which basically means if you get to the $10,000 mark, you lose the account. Your target is to pass the account, that is $10,000. So you need 10% to pass it. You can't lose more than 10%. I'm not going to worry about daily targets or anything like that for now. That's just the key stuff that we have to kind of understand. And this is just a premise for loads of different ones. I don't know which good prop firms there are out there or anything like that. So it all comes down to risk. Because if you risk 2% per trade, you basically only have 5 losses. If you risk 1% per trade, you have 10 losses, but you're not looking at it the right way when you think of that, because you're not going to lose 10 trades in a row. Why do most people blow accounts? It is nothing to do with your ability in the markets. You understand how to trade. Promise you. Every single person in a chat right now who is here listening to me talk here, tell me who has understood what we have spoken about today and yesterday. Who has understood the very simple model that I've shown you? And I guarantee you, most of you have completely understood it. So what you have now is an edge in the market. You have an edge. But most people blow accounts because they oversize, they revenge trade, they are not confident, over risking, being a muppet, to be basically frank. Because what happens on most funded accounts is, let's say you enter here, this is your 0 mark. You hover around here for ages, and then you get maybe one win, you get ahead of yourself and you think, yeah, great. And then you take a loss. One loss can put you there. But that one loss can make you do that very, very quickly. Within 1 or 2 trades. Because it's your emotional discipline. That's why you're losing. This is all it is. So you have got to free yourself from these thoughts in order to pass them. So I don't want you to think about the risk. I want you to think about how you become more confident. How I would pass a funded account. So how to approach a funded account is that I would start by risking 0.5%. Okay. What that basically allows you is multiple mistakes on a funded account. It allows you the chance to experiment. It allows you the chance to build up confidence. And there's going to be a 3-stage approach to this. Okay. And the 3-stage approach to this is very simple. It's going to help you go from demo to funded to, oh, I've just entered the wrong thing. What have I done? There we go. That scared the crap out of me just then. So the triangle to free, okay? Because a lot of people don't have the capital. So how do we go? How do we go from demo account? Because I guarantee you a lot of you will pass demo accounts. But that's what we want to do. Demo, which is the practice. Funded, which is the test. Freedom is getting paid. So to do this, you start by risking 0.5%. With the 0.5%, you build it up slowly. Now, the way to build this up slowly, and you got to stay with me on this, is when you get to, let's just say, 4% profit, increase your risk to 1% per trade. So basically what you're doing is this. You're entering, you're being cautious, you're going very, very slowly. And then when you get to that 4% mark, you're just putting the brakes on a little bit, not the brakes, so the accelerator, and you're just going to go a little bit quicker. Now let's just say this marker here is your 4% area. Let's just say that's your 4%. I was going to say threshold, but I can't spell threshold. I didn't do very well at school. So let's just say that's your 4% profit. And now we're starting to risk 1% per trade. Then let's just say you get up to 7% profit. And basically when you get to 7%, you can increase your risk to 2%, for example. Because what that then allows you to do is push the real accelerator button to just get to that area. Now, let's just say that the area is here. So this is your target, which is your 10% magic marker. Okay? Let's say something happens. Let's say you lose a trade. Let's say you lose a trade and you lose one and you go back down to 7%. What you then have to do is go from 2% back to 1%. So you're just being very, very sensible. And then let's say, for argument's sake, you have a little bit of a tilt, which will happen, and you lose a couple of trades. You go to 4% profit. You then revert back to risking 0.5%. So you're just lowering your risk. So you speed up the more profit you get into, but when you're coming down again, it's going to help you. So you are never, when you are anywhere under 4%, your risk is 0.5%. That's it. That's your risk. This is going to help you build up the confidence to pass your funding account. And then I'm going to show you how to scale it as well. But there's actually a secret sitting in here that not many people talk about. Okay? And what people don't do or realize is that demo account is fake money. So your emotions are fine and easy because you probably do really well on a demo account. Even though this is fake money, this still equals higher stakes, more pressure, which what essentially occurs to meaning you lose all of the capital very, very quickly. So now we're gonna bridge it. We're actually gonna do this because this is the correct way to get to here. this, and again, very, very important you understand. I'm not telling you what to do. This is just how I would do it. And this is education only. Very small live account. Now, by very small live account, what I mean is anything that you can put into an account to what a broker would allow you to put into, where you do not care what happens to it. It could be a £500, it could be £1,000, it could be whatever that is personal to you. Okay. Based on that, right, you're going to go from a demo, because you're going to smash it on a demo pretty quickly. You then go to a very small live account. Now, the reason you're doing it this way, is because this will allow you to practice. Is that how you spell practice? No, it's not. I don't know. Practice risk management. Meaning, if let's just say you've got a $200 account and you are risking, let's just say for argument's sake on this account, I don't know what your broker would allow you to trade on it. You've obviously got to find one, but let's just say you're trading $5 per trade, right? You lose $5 on a trade out of a $200 account, big deal, right? Who cares? It's just $5. So basically, what are you then doing? In this example with this trade here, you're not going to go to break even early. You're not going to go break even early. You're going to let the trade hit, take profit or stop loss. Break even is what's sabotaging you. This is a way to build up confidence. And then as you get more confident, you start risking $10 per trade. And then what's going to happen is you're going to turn that $200 live account money into probably something like $500, $600, $700, maybe even $1,000. At that point, you've built up enough confidence, awareness, and practice around you to go to your funded account. And basically, the funded account is going to be a $100,000 account. That's not real money. It's fake money. That's why I keep fake money up there. But it's higher stake, higher pressure, because then you can practice knowing, look, I've grown a live account, because growing a demo account compared to a live account and a funded account is just not the same. I guarantee probably 90% of you in here will smash it out on a demo account, and then you'll get to a funded account. You'll wonder why it's so much harder. But this is the method in how you get to becoming financially free. I promise you. This is the method in how you do it, how you approach it, how you approach everything in life. It's by doing things sensibly, which leads us on to the last thing of this, and that's funded freedom. So when you are live, you are always going to risk 0.5 to 1% of account size. The reason you're doing that is because you will not have just one funded account. Example, $100,000 account. Profit is going to be, in this example here, let's just say you were able to make 3% for the month. 3% for the month. Or let's just say that on a random month, you've made 3%, which is a lot more realistic. It's $3,000. All right. Even that alone is a lot, that you could quit your job on that. All right. So now let's just say you've got 3 funded accounts. So that would look like $300,000, wouldn't it? Which would mean your profit based on that would end up being $9,000, because you've got 3 funded accounts, and you can do something called copy trading, meaning you have one account, which is your master account. And on that one account, the other trades are being copied and mirrored over. That is going to allow you the chance to scale, which means you could have 5 funded accounts, or even if you have 6 funded accounts, just as an example, where you have got, so that would be $100,000, which would be equal to what, $600,000 in funded capital. Profit therefore would be 12,000, 120,000, whatever, 12,000 a month. You know, the numbers are very, very scalable. This is what's going to help you lead towards those 50 to 100,000. This is based on. This is the thing. I'm being very, because I'm the honest one. You know, Jose Mourinho says I'm the special one. I'm the honest one. This is a target of a 3% month. There are going to be some months where you get a 6% month, where that 12,000 profit might look like 20, 30,000, might look like 40,000. It's just keeping you consistent. And basically, if you keep your risk small, under 0.5% or 1%, basically what that's going to tell you is you're not going to violate any rules with the prop firm. You're not going to oversize. You're not going to over leverage. You're going to stick with the rules that are set out by the prop firm, and it's going to allow you the chance to scale these prop firms. That is basically how you will pass these accounts. Now, based on everything we've spoken about, one thing you have to understand is that most traders have nothing to do. And I'm going to be announcing very, very soon the free thing you're getting. And I've also got another surprise for the school community as well. But it's a belief, expectation, and attachment. You don't trade the market, okay? You trade your mindset. These are very, very amazing quotes from someone called Mark Douglas. And you need to think about the probability mindset now, because every trade is just a series of outcomes. No trade matters individually. All right? You need to detach from needing to win, basically. You don't have to win every trade. This is why I'm saying about the 1 to 2 risk reward setup, because you don't need to win every single trade. And you've got to remember that the market owes you sweet nothing. The market owes you absolutely nothing. So you have to remove entitlement, ego, and emotional attachment. It's the only way. And you can't control any results. You can only control the actual execution of your trade. So you've got emotional common traps in the market. Revenge trading. You can put a comment in the chat if this is you. Revenge trading, fear of missing out, needing to make back a loss, the overconfidence after winning. These are all really, really common things in the market. And this is the only reason, okay, this is the only reason you are losing your funded accounts. This is the only reason you're losing your funded accounts, or you're blowing your real accounts, whatever it is. All of these different things. A great example is I'm emotionless when it comes to trading now, but emotional traps get me in other areas of my life. So I'm an avid West Ham football fan, for example. If I lose £5,000 or £10,000 trading in one day, I could go to my kids for dinner. No, they wouldn't be able to tell. My wife wouldn't be able to tell the difference, right? But she has to look for the West Ham score after every game to find out if it's going to ruin our weekend or not. Like that's how emotionally attached to them I am. And it just so happens that this season, it's really bad. This is the worst it's been since like 2012. So we're in a terrible situation. That affects me emotionally, but trading does not. So you have to flip. So I need to control my emotion when it comes to football. Golf, Jesus Christ. If anyone here likes golf, watching the Ryder Cup, when it was Tommy Fleetwood, Justin Rose against Scheffler and Bryson, like in that moment, it was like, Jesus Christ, I was crying at the TV, like literally crying. Like it was mental. And that's because I was emotionally involved in it. Yeah. Trading, you can't be that way. And these emotional traps is essentially what gets you. So how we essentially break from these emotional loops is, you know, you could have a pre-trade checklist. You could have Loss caps. I have a loss cap, which means if I lose 2 trades on the day, I'm done trading for the day. If I come in on a Monday and I take 2 trades and I lose them both, I do not trade for the rest of the day. If I come in on a Tuesday and I lose again for the 3rd time, I'm done for the entirety of that week. I'm not doing it. It's done. It's over. Because that means it's impossible for me to lose. If I'm risking 1% per trade, it's impossible for me to lose 3% in a week. If I risk 0.5% per trade on a funded account, I can't lose more than 1.5% every week, which means it's going to take you between 5 to 6, 8 weeks to fail a funded account if you do it properly. Does that make sense? So journaling patterns, taking, you can download TradeZilla, you can download all these different things. And you've got to detach to perform. These are all very simple things that you can do to help break from these emotional traps. And the biggest thing, so important, truly, truly, truly understand risk reward. You've got to understand risk reward. Ladies and gentlemen, if you understand risk reward and you understand that losing is okay, and you ignore 99% of the absolute crap on social media when someone is flying in front of you saying they got a 90% win rate, they have not. It doesn't exist. I promise you, I've been doing this since 2015. I do not have a 90% win rate. Okay? It's not. It doesn't happen. It just doesn't. I know some of the best traders in the world, miles better than me, miles better than anyone you'd see, even on social media, and they don't have a 90% win rate. That's the perfect thing about it. We don't need a 90% win rate to make money. That's why we utilize a 1 to 2 in the markets. So I've got, this is an example, but when you flip a coin, all right, when you flip a coin, what I want you to imagine is, and I had a conversation with a girl in Dublin. I flew out to meet her because she won a one-on-one with me. And she said, and I said, you can flip a coin. And basically, you don't know the outcome of that flip coin. And she said, no, there's a skill behind it. I said, no, there's not. You can't. She said, no, it's the technique and the way you flip it. And I was like, no, it's not. And she couldn't prove it. And if she's here now, she'll laugh about this because this is a real story. But basically, when you flip a coin 10 times, you don't know if it's going to hit heads or tails. And I want you to go and do this challenge. And again, I want you to do this challenge, write it down and put it on Instagram and tag me. Because I promise you, if you were able to flip it, and let's just say heads is your winner at 2% and tails is your loser at -1%. So every time I hear heads, write down on a bit of paper, take 10 trades at a time. And every single time you take a win at heads, you write down 2%. If you win again, 2%, which means you're 4% up. If you do it again and you lose, you're down 1%, which means you're 3% up. Do that 10 times. I categorically promise you, if you do that whole exercise 20 times, you would be amazed at your results. And that is based on something at a 50-50 outcome. With your edge in the markets, you've kind of got like a weighted coin, meaning it's going to hit heads more times than it hits tails. And it doesn't even matter if it's a 50-50 shot. You're going to make money with it. But that's how important and amazing and powerful this whole process is. So just imagine to yourself now that you've lost 5 trades in a row. Okay. And I want everyone to do this with me. Write down what your inner voice would say after the 5th loss. I want to know what your inner voice would say after the 5th loss of that trade. You've lost 5 trades in a row. And we'll have a laugh in the chat. What does it mean to you when you lose 5 trades in a row? I don't want you to say what you think you should say. I want you to say what your mind would say again. What your mind would naturally be like. Be creative. How angry would you be? How much stuff would you break? F this, for F's sake, the market's against me. I'm shit at this. I suck. Give up trading. So there's loads of amazing things coming in here. All right. Unbelievable. So based on that, now I want you to do the next exercise. I want you to rewrite the same sentence as if you were the trader that you want to become. So if you are the 6-7 figure trader what I want you to do is do the exact same exercise now and write in the chat right now, how would you look at it from a trading perspective as a professional, world-class trader? Because you wouldn't be doing the same things. You would be doing all of this different stuff. You would be saying it's part of it. It's how you take a loss. I'll come back again. I'll come back stronger. The wind's around the corner. I trust the process. These are the things you'd be saying. And you're now saying it. Win some, lose some. Next trade. Stick to the rules and it'll work. Always tomorrow do better. Congratulations, I knew you could do it. And this is after your 5th loss when you are the trader you know you want to become. So now you need to understand it's the way you think. It's nothing to do with anything else. It's the way you think. Okay? So you've got stages when it comes to trading. You've got stage 1, unconscious incompetence. You've got stage 2, conscious incompetence. Stage 3, conscious competence. And stage 4, unconscious competence. Every single person in the world, when they are born, they wake up, they are unconsciously incompetent on how to talk, how to walk, how to feed themselves. And they grow up to the point where they're able to talk, walk, and feed themselves. They turn into a stage 4. If anyone here drives, which I think most of you probably do, or I would hope that a lot of you do, is when you learn how to drive, you start at stage 1. You don't know how to drive. But now if you've been driving like me, 15 odd years, whatever it is, I know that, I'm probably older than that, Jesus Christ. But either way, I've been driving a long time, and I know that I don't think about the traffic light. I don't think about the pedestrian crossing. I don't think about the speed limit. I don't think about all the safety hazards. But naturally in my head, I do them because I'm doing it unconsciously, competently. It's the exact same thing for trading. There are a lot of people in this chat room now that probably played Call of Duty during COVID. And how good did you get at Call of Duty to the point where you were doing it just subconsciously? Because you did it over time. Every single one of you start off at stage 1 as a trader. You have no idea what a pip is, no idea what a point is, no idea what futures is, trading, CFD brokers, the lot. You didn't have any idea. You get to funded account status, you're probably still only at stage 2 or 3. Because when you pass your driving test, you're not at stage 4 as a driver. When you pass your driving test, you are still probably at stage 2, maybe in between stage 2 and 3. You've just been given a pink slip to say you can drive a car. You learn how to drive when you get to serious wind conditions, weather conditions, snow, ice. You learn how to reverse, brake, stop. You learn about the hazards. You learn about the near-death experience that you likely have, whatever it is. These are the points in your driving career where over a 5-10 year period, you become an expert driver. The exact same thing. It works in trading. Whatever you do for a living right now, and I'll look at you now in the eye and say, whatever you do for a living is very, very simple. You are good at what you do. You are probably stage 4 in something. I went to an event in, where was it? It was in Munich. And I spoke to this lovely lady who said to me that she really struggles when it comes to learning how to trade, to picking up the momentum and learning how to trade. And she said to me that she didn't get it. And I said, okay, do you speak any language? She said, yeah, I speak 5. One of them was Mandarin. I said, you have learned 5 languages. Trading is going to be a walk in the park for you, especially when you learn Mandarin. And the only way she got good at learning Mandarin and all these languages was probably just time. So, and this is going to tie into the free thing I've got for you guys. And I want to say to everyone that's here now, well done, first and foremost, because I see people drop off. Naturally, people drop away. They get bored. They don't want to be here. They don't see it. I know there's a percentage of people in here that aren't interested. I know there's a massive percentage in here of people who are absolutely going to take this on board, and they're going to go and do it. So, do you think that you are at a level where you have learned enough today to go away and practice it and go away and trade with a profitable model? Because there's something you need to know. You were one of the few that stayed till the end. Okay, you were one of the few that stayed to the end. And because of that, that's why you get it. So I announced possibly the biggest offer I've ever done in terms of the community. I understand that comes, you know, at a price because it's obviously the community, it's my time and all the stuff. And I'm going to talk to you about that in a minute, but this is now the free thing. And the surprise is very, very simple. Okay. The surprise is, and I'm going to draw it out, I'm going to map it out for you. Has anyone ever seen Harry Potter? I love Harry Potter. That's what I've kind of framed the whole thing around, especially at Christmas. Your free gift. Okay, so if you have seen Harry Potter, you'll know that in the end of it, he doesn't find out right till the end that he has a Horcrux inside of him, which is obviously Lord Voldemort's Horcrux. You may not realize this yet. Okay, you may not realize this yet, but there is actually a Horcrux inside every single one of you. Now, on the offer last night, I mentioned Tom Camp Trading Challenge. That offer is still there, but over the last 2 days, you have been part of a live 2-day trading challenge. So what that basically means is that there's a Horcrux in you. You have been alive. You have been live watching a 2-day challenge, which means we have work to do now. So number one, we have created a checklist, which is now yours. If you go to the link in the description, you have the checklist. It's yours. This is going to include trading plan. It's going to include everything you need with the checklist, exactly how you go away and execute this right now. But number two, you are part of a trading challenge right now. Meaning the only thing you have to do is wait to receive a message, an email, which you can go on the link in the description. And basically, you have got 4 weeks to use the trading checklist, trading plan that I am going to be giving you, which includes everything you have learned in the last 2 days. And in 4 weeks' time, you are going to submit your results that you have learned from here. And I'm going to be picking multiple winners where you will win trading funded accounts. You will win. I will fly to wherever you are. I will fly to wherever you are in the world, and I will sit down with you one-on-one and spend the day with you. I've done this for the last 2 years. I have flown to Dubai, to Dublin, to Munich, to Prague, to Latvia. I can't remember the last one I went to, Denmark. I've gone all over the country. I've gone to America. I'm going to Australia. Like I've done all this. You are now part of a 2-day trading challenge, and you have got 4 weeks. And after this call, and I'm going to tell you exactly how you enter, because everyone here gets this. So you need to stay till the end so I can tell you exactly what to do to basically get, firstly, the complete trading plan and checklist from me, which is going to be based on everything we have learned with examples and everything you could possibly have. And then I'm going to give you the homework. And I'm going to tell you exactly where to send your homework to in 4 weeks' time. And this is the thing. Not every single person in here is going to do it. And I know that if you take the information that you have spent in the last 2 days with me live for free, and you spend the next 4 weeks doing it, you come to me in 4 weeks, you will show me a profitable record. and I will pick multiple winners. There's 1,100 of nearly 1,200 of you in here now. I'm going to pick hundreds of winners. That is what you're going to get. And worst case, if you don't win this challenge, the worst case scenario is going to be you become a trader, a much better trader than you are now, because you're going to go and practice the exact thing that we spoke about. So you are now part of the trading challenge. And you have to understand that when you execute without emotion, you become unstoppable. Excuse me. So I will let you know how you can basically gain and get access to that challenge right at the end of this video. So if you want it, you need to stay. And like I said, and I want to be very, very clear when I say this, nobody outside of this live right now gets this. Only you. Not one person is going to get this information. I'm not going to put this on Instagram. I'm not going to put it on Facebook, TikTok, Twitter, YouTube. I'm not going to put it in the community. I'm not going to put it anywhere. So you guys get it. And I said from the very start, if you show up live, you demonstrate you can do the work, you listen to me, you put your trust and faith into me, I will give you something for free. And that is exactly what I have done and I'm doing. And essentially, without telling you, without you even realizing it, you have been you are a Horcrux of the trading challenge. You've been part of it the whole time. You just didn't know it. And as long as you've been there and you've executed and listened to stuff, I promise you're going to love it. And I'm now talking to the serious traders who want to continue doing it, because this is one thing I feel like I've delivered to you in multiple ways. Because last night I revealed the biggest offer I've ever made, ever. And there's never going to be an offer. There's never going to be an offer in the trading space, firstly, that offers you the free gift I've just offered you. You're never going to see it again. But I've got something even bigger for those who are going to invest. And again, the surprise is unbelievable. Trust me when I say this. So I introduced to you last night the Trading Academy, the new academy. But this time, I've got something else to show you, which is going to be, in my opinion, no one's ever done it. In my opinion, if you listen last night, no one's ever done it from last night. No one will ever do it. And I've counteracted a situation where I think there are going to be educators out there who are going to capitalize on this and try and copy me. Because if you look at my content on Instagram, and I want you to look at the one I'll show you, but basically it was where I spoke about accumulation, manipulation, distribution. Do you know the amount of creators that have copied that? And that's what they do. They take it. They can't think of their own ideas themselves. So I'm putting a copyright on my work, on the way I help you. So we knew that the launch price was, so after launch, it'll be $150 a month. You can sign up now for $39 a month for a launch price. That gives you the strategy, it gives you live lessons, it gives you weekly outlook, it gives you everything. So we know that this gets you everything you could want. The live lessons, the weekly outlook, the new lessons every month, that's going to be just $39. But that's not the only thing, okay? Because there's something else I've done. And we know, we've said this yesterday. So if you're here and you've watched this, we'll do it again. And I'm not going to go through the whole thing because we've obviously done it. And I want to get to the bit that you are going to want, basically. But we know it's an all-in-one trading academy. We know it's got mindset, business, trading in your pocket. Live lessons, calls, tools, community, notifications, everything. Okay? So you will pay $39 a month for this, which is cheaper than any trading community out there in the world, period. There is nothing, no one out there that's going to beat this. And there are so many Discords out there that charge you $150, $200 a month, and you do not get the value that you've got here in the free education, let alone what you're going to get for $39 a month. And I've stacked it with more bonuses. Obviously, I revealed to you yesterday that I've released a book. And that book is a manuscript copy. And this is what's actually taken me 18 months to do. Like, I've written this, I've had it proofread, I've sent it off, I've had help. It's been amazing. It's been a real stressful journey, but the book is on that community now. It's there. It's there. So you can go and literally start reading. And I know there's people that have already looked at the book and have already given me amazing feedback on it as well. I'm trying to brand it as the version 2.0 of the Trading in the Zone. That's what's kind of been my motivation towards it. Obviously, an extensive mindset course, full course on trader psychology, discipline, emotional control, handling drawdown, sticking to a plan. And then there's the Inner Circle annual. Now, that is basically where I'm asking you to make one payment for the year. And it's obviously everything plus the insane extras that we spoke about last night. Again, I want you to stay with me because the surprise is right at the end. You get your pro membership features, but everything is included. Plus, like we spoke about, the bonuses that come with this, extensive business and scaling course, a deeper understanding on building and scaling a real business around your skills, just beyond being a side hustle, basically. You get access to 100 hours of live pre-recorded lessons that are in there, ready to go. And I've also released a podcast. Now, the podcast isn't out to the public yet. I'm doing about 20 episodes before I release it. Inside that podcast, basically, you're going to get access to it before anyone else gets inside. Okay, you're going to get access to it before anyone else gets inside. And inside that podcast, I have spoken to entrepreneurs that are not just in trading, but in e-commerce, in content, in property, and more. Paying members will basically get unseen bonus clips where I'll ask each guest how, if you had to start again from scratch, how would you do it? How would you scale into 6 and 7 figures as you've done? These are going to be private clips that are only going to be sent to paying members inside this app in the Inner Circle part when it's out to the public. And we spoke about the pricing of this yesterday. It should be $1,800 a year, but you're only going to pay $397 a year. And that was what it was. Now, there is something else that I spoke about, and that was the Tom Camp Trading Challenge. Now, we've just done a 2-day trading challenge, and there's a 4-week challenge ahead of you now. So when you see how powerful it's going to be, you are going to want to be a part of this one, which is kicking off in February 2026. So literally a few weeks, and we will be doing this for 3 weeks. Over the 3 weeks, you're then going to do 4 weeks of implementation. You're then going to finish with a clear trading plan and objective. And it's the kind of thing people are charging between £2,000 and £3,000 for. So how it works, again, you're going to have 1 to 3 weeks exclusive live lessons, 3 to 7 weeks of implementation during the challenge. And the end of the week, I will pick multiple winners. So it's kind of like what we were doing in there, but on steroids for 3 weeks, only in that community as well. So what we've done, and this is obviously part of the challenge, and at the end of it, I'm going to pick a series of multiple winners. But worst case, if you don't cover the strategy step by step, mindset, psychology, live examples, breakdowns, clear personal objective and action plan. And by the end of it, you will have a clear written objective and a plan for the next 4 weeks. So there is zero confusion about what you are doing. Okay. So you just have to show up to the live lessons, do the homework I set you, follow the rules, track your progress, and everyone who competes is eligible to win. Spelling error there. If you do that, you're in a pool of people I'm going to choose winners from. We spoke about this last night. This is not including the surprise that I've got for you. And this is only going to be available to traders who are really dead serious. Okay. You can win private one-on-one mentorship day with me in your home, country, and city. A funded challenge paid for by me. Access to an exclusive private community as well. And this is the thing, guys, that we're not having. And this goes down to the free 2-day challenge we just done. Worst case, if you don't win, you're going to leave a trader. You're going to leave a much better trader. That's what we have to try and understand here. So why it's worth $3,000 is because there's a lot of lessons, there's a lot of stuff, strategy, mindset, live execution, real prizes, long-term access, comparable programs are charging you $3,000 plus. I've seen it. And if you look around the industry, people are selling 14 to 21 day accelerator courses for this sort of price. You can look at anyone that's trying to charge you the stuff. All right. And someone said, he's just repeating and repeating. I'm not repeating and repeating. I'm going to tell you now. So it's a fair price. We know that that price is not going to be any of these numbers. And we know that that is included as part of your inner circle membership inside the school community, which is in the description here now under this video. But there's something else. And I haven't told you about this bit yet. Okay, I haven't told you about this bit. This is the next and final, hopefully, surprise. So we know there's a TomCamp trading challenge coming in February 2026 inside the school community. And I know what's going to happen. I know other people will steal this because, like I said, if you go to my Instagram and you look at one of my most viral posts, accumulation, manipulation, distribution, where I have the top layer as one and then the bottom layer, and go and look at it and then type that in on Instagram, and there's about 20 different educators out there who have just copied the same thing. I know out of the 1,200 people in here right now, I know for a fact, and you can wave to them right now, there are trading gurus sitting here watching this, being curious, being nosy. I know they're here. And I want to welcome them with open arms because it's a friendly space. But I know people are going to steal this. I know they are. And I know they will run their own at some point in the year, 1 to 3 week program later on. I know they're going to do it. They're going to tie you in. They're going to charge you $1,000, $2,000. They're going to do it. Okay. So they will charge you thousands for it, which is why I decided to basically do something else as well. That is going to be the TomCamp Trading Challenge Part 2 of August 2026. You are not doing one trading challenge inside this inner circle. You are doing 2 challenges inside the inner circle mentorship. One is going to be in February and the next one is going to be in August. All right. And this stops people stealing it. It stops people charging you thousands of dollars in the summer once the one in February is done. And it's going to be perfect for you because you have got all of this stuff. Now, each one should be $3,000. That's a total of $6,000 of value there just in those. That's not including the podcast, the stuff, the education, the lessons, the school community, which should be $150 a month. It should be $1,800 a year. So I've added another one. And you already know the first one is inclusive of the inner circle. So we know there's been a huge saving there. So how much is the second one going to cost in addition, in addition to your inner circle membership? The total value is $6,000. All right. You will not pay $6,000. You will not pay the $3,000 because it is worth, one of them on their own is worth $3,000. You're not going to pay that. I'm not going to charge it for you. You're not going to pay $997 for one. And you're not going to pay $697 for the second one. You will pay $0 because it is going to be included in your inner circle membership. So you have access to both challenges throughout the year, which basically means if you're inside there as an inner circle member, you are going to have the knowledge from this event plus the extra support. And if you take the knowledge and the tools and the opportunities from today and actually use them, this is going to be a room full of people right now where you will be able to say tonight and last night was the night that changed my life, because you now have a clear plan in place for the year. If you are not wanting to pay for the school community, you've got the 2-day challenge for free. You can go to the link in my description and you download it. And I need to talk to you about how to get access to that, how you do it. because it's important if you want access to it for free. And then there's a 4-week challenge ahead of you. If you're in that school community, and also if you've only paid $39 and you want to upgrade, you can do that in the community. If you haven't done either, you can join the inner circle now. And that offer runs out. This offer for the trading challenge is only going to be valid until Sunday at 7 o'clock UK time. You've got less now than 48 hours of the offer, and then that offer is gone forever. And equally as well, I know that this has, because the last trading challenge I did last year literally changed lives. I know it did, because I met people, I met up with people who won the last challenges that done it. But in any case, whatever path you decide to go on, you have got the tools and the capability now to completely go and change your life. And you just have to keep things as simple as possible. That is all you have to do. Don't worry about the noise. Don't worry about all of the people that are trying to overcomplicate it. Don't worry about anything like that. Whether you've been with me for the last few years, whether you're new to my stuff, my only goal is the same. In 5 to 10 years' time, you will still see me trading in the same way, because it's just the only way I know and understand it. I have never claimed to understand everything about market mechanics, all this different stuff. I've never in my life done that. I've always just approached the markets in a very opportune way to try and keep things as simple as I can. Each trading challenge is going to offer you something very different as well in terms of the way you experience it. And over time, and I said this at the very start, it's your experience. So now, to get access, and I want to be very clear about, because there's 1,100 of you here now, how you get access to the free challenge now. In the link, the description now, in the description on this YouTube video, basically, there is a link which says claim free prize. All you've got to do is put in your name and your email, and I am going to email you with every bit of instruction on what to do. Now, this is the important bit, because people got very confused last time, and I want to make sure you're all listening. When you fill in the form, again, the link is in the description of this YouTube video, check your inbox, okay? Type in the name Tom Camp. It could be in your junk, in your spam, anywhere. If you're not subscribed to my emails, you might have to confirm your subscription. Everything's explained in the link. That gets you access to the free 2-day challenge, in which I'm going to be looking at the results in 4 weeks. It tells you in 4 weeks when to basically do it, where to send the homework, what type of homework to do, how to set the trades out. And it also, I attach in the email I'm going to send you a full checklist, which covers exactly what we've spoken about today. And that is the free gift. Have I delivered for you the free gift? When I said there's going to be something free for everyone, every single person, do you think that's going to give you enough to go away and actually implement something? Because you've actually got, without realizing it, you've got 2 free gifts in there. The free gift number 1 is a complete trader's checklist and trading plan, which is going to be emailed to you if you use the link. And the second gift is going to be the actual challenge in itself, because I said you are the Horcrux, okay? Because you are the Horcrux. And then obviously for anyone, this is obviously results of when I've done in-person events, when I've done other events. These are results that you can strive to get. This is somebody who is an absolutely wonderful, wonderful person who came on the event. She's been with us for a while. She came on the event before, this was before and then after a couple of days of learning. And then you've got amazing results happening in here. And people get funded. I help people get funded. There are a lot of people out there that generally are probably in this chat right now, sitting there thinking I'm some sort of pleb, I'm some sort of muppet, whatever. Do you know one of the passions I have generally? It's just helping people. And there's nothing better for me than seeing me being able to help people achieve these things. And that's why I've given you access to the school community for a ridiculously affordable price. That's why I've included all the bonuses in that are in there now. And equally, that's why I spend all of my time going on these events. Like every event you come to, if anyone came to the New York event last time, you would have been in the room. I charge $50 a ticket. That's just to make sure that you actually come. Because if I said it was free, you wouldn't. Not a lot of people turn up. I've tried that before. So I just make it $50 to make you accountable to turn up. I lose money at these events. I don't do these events or anything like that to make money. I do them because I love them. I love meeting people. And one thing I know and understand when it comes to trading is a God lonely place, an environment that is just super, super lonely. And what I do know 100% is if you can surround yourself in a community of people of which will support you and help you, this will go such a long way in doing that. And that's why I've done it. That's why I've done it. So the Academy is live. You can join the school community today and get access to everything, the breakdowns, the live lessons, the lessons, and everything in one place. So 48 hours now to claim that offer. And it ends Sunday, 7 p.m. UK time. If you have any questions or anything, feel free to reach out. If you haven't got the email just yet, you can just give it a minute or so. I tested it earlier. I think one of them took about 10 minutes to come through. And if you win the trading challenge, it doesn't matter where you live. I've gone to the craziest of places all around the world just to meet one person before. I've spent a whole day with someone. I've flown all the way to Dubai just to meet people who have won these challenges. And all I'm asking you to do is just put that F in. That's all I ask you to do. So I just want to say first and foremost again, and if you did put it on Instagram and you shared it on Instagram and you've tagged me, I will share it and we'll show everyone just how amazing this community is. But from the bottom of my heart, this is the first time I've done a YouTube live like this, a 2-day event. It's certainly not going to be the last either. I have enjoyed it. I've enjoyed watching in the comments over here interact. I've enjoyed watching people taking the information. I've also, and I want to thank everyone for being here, including the people that just outright completely hate me. I understand it's not your cup of tea. I understand you want to watch and just take the mick and it's fine. I understand that's part of it. And even though a lot of you or some of you in here are not liking me or a fan of me, I have a lot of love and appreciation for you for spending your evening here talking to me, even if it's positive, negative, mutual, whatever. And I want to thank every single person who has come in and just supported it. And I promise you, like I said, my promise to you is very, very simple. If you put the work in, you will achieve greatness. I absolutely promise you. I've got nothing but love for every single person that is here. And if you're in the challenge that's free, again, link in this description. I'm going to take that link in description away in the next couple of hours because no one else is allowed to come and have a look at that. If you are joining the community, the school community, you've got 48 hours to claim the offers that are in there before they go. Other than that, guys, thank you so much for joining in. And I will let you know when we do another one. And I will talk to you on Instagram and we'll engage in there. So guys, thank you so much. Have an amazing weekend, whatever you're up to. And I will speak to you all very, very soon. Take care, guys.